Trade finance is the backbone of the global economy, and Tradeteq is on a mission to turn it into a liquid asset class. A bold statement? Let me explain. Let's take an example of a supply chain, from a plastic granular producer to a keyboard producer, laptop producer, all the way to the reseller. As you can see, there is always time which gets kind of wasted in the production, inventory, and transport. And that, of course, will lead to also delayed payments. Banks are filling this gap. They are prepaying at a discount to suppliers, and then the buyers will eventually pay the invoice at the due date. Banks are doing this currently in very large size. So there's 7.6 trillion of global trade finance done per annum. It's of course not just invoice financing, there are other forms of trade finance as well. But banks need to distribute that risk to some degree. They distribute it to other banks. They also distribute it to credit insurers and to a very limited degree to capital market participants. Those latter ones, they need quite expensive repackaging and portfolio risk information, such that it becomes digestible for these capital market participants. Those processes are very expensive, and very often it leaves the capital market investor with absolutely no extra spread just because the costs are too high. Now, if banks can't distribute, then our plastic granular producer, in our example, will potentially not be fully served. And the Asian Development Bank is estimated currently that there is a 1.5 trillion gap for trade finance. Other estimates are going well beyond this. Our mission is to reduce these friction costs through cutting-edge trading automation technology, such that all participants are in a position to get what they want. Corporates, better access to financing costs. Banks are able now to increase their net interest income, and capital market access capital market participants can get access to an asset class. We support all trading channels for banks, and we already operate them, whether they want to distribute to other banks, credit insurers, or capital market participants. We are building a trading infrastructure, and to a degree, we have already laid the groundwork for this, with many of the world's leading participants already active using it. It's a little bit like a telephone system where you wouldn't want to put wires into place between every two parties. Banks need to plug into limit system and back office systems, so do investors, and the central marketplace essentially allows this to become an attractive and also efficient many-to-many marketplace. We manage the whole trade lifecycle, management from pre-trade, trade execution, all the way to post-trade. And our ecosystem now involves some of the largest trade finance banks, asset managers, but also credit risk insurers. We have more than 45 members which joined the Trade Finance Distribution Initiative, which we are jointly operate with the International Trade and Forwarding Association, and where many of them are already in full production with Tradeteq. As such, you can see us as a kind of a low-end disruptive innovation where we make processes more efficient, but at the same time, we are enabling a 0-to-1 strategy through a new market disruptive innovation, where we are cutting the cost to such a degree that suddenly trade finance becomes a liquid asset class. But needless to say, our biggest assets is our team, and in particular our management team, which has a tremendous amount of experience, having been working in some of the leading financial firms and technology firms previously. So in short, to summarize, Tradeteq has 55 full-time employees. We operate out of London, but also have rep offices in Dubai, Vietnam, Singapore, now also Frankfurt. And we have been recognized through a number of awards and have revenues now exceeding 2.2 million as of today, with a quite strong growth and trajectory path.